Hello and welcome back to The Note. On a much calmer day for world markets than we saw on Monday, stock markets across the world have generally been mixed. Certainly no continuation of the great drama we saw on Monday, which does look for the moment as though it was largely technical. There was one very interesting development, however, which is the continuing fall in the pound sterling. As you can see from this chart here, the pound is now almost below its lowest point from last year, set just before the general election, which would bring it to a low since 2010. And there are clear reasons for this. If we take a look at the next chart, we're looking here at core inflation, excluding food and oil, those things that central banks can't control, and plainly a clear guide to how central banks might act. You can see that the UK had a genuine inflation problem in the years immediately after the crisis, which did eventually come under control. For a long time appeared to be largely in line with the US, but at this point UK core inflation is far below that in the US. That plainly gives strong ballast to the notion that we have a divergence in monetary policy to look forward to. People are now beginning to talk about the Bank of England not even raising rates at all this year, when it was once very popular to suggest that they would follow very swiftly after the Fed. That kind of divergence strengthens the dollar and weakens the pound. There's also something else going on though, which we can perhaps illustrate if we take a look at this chart, which compares the euro and sterling against the dollar since 2010. Naturally, the euro has done far worse over that period, although you can see the clear family resemblance between the two. We all know why the euro has done worse. Primarily, it's had a weaker economy, and that's been because of great concerns about its very existence, whether the Eurozone can hold together as a political entity. Now, entering this year, we begin to enter a season when there are some questions over whether the United Kingdom can hold together as an entity and whether it will remain in the European Union. We have the Brexit referendum to look forward to. I'm not going to try to predict the result of that referendum for you, but the key point, as we've all seen from the European experience, is that if you see a rise in the perceived odds of a rupture, obviously a Brexit might well lead to Scotland leading the UK, all you need to see is a rise in the perceived odds that a Brexit referendum succeeds from here for sterling to fall quite a lot further. That is why people are beginning to position themselves for such an eventuality, and it's why it's difficult to be betting too enthusiastically on sterling to strengthen anytime soon, unless polls really start to convince everyone that Brexit isn't going to happen.